Hi, I Chandrashekhar Tilak welcome you all in this episode of Market which is getting aired on 21st of April 2021. What sort of a tumultuous week we have as far as our stock market indices are concerned? We have witnessed both the events. First, a Sensex going down during the day by more than 1,100 points. In fact, during that particular day at one point of time, it was down by more than 1,200 points. On subsequent 3 days, it recovered entire loss of this 1000 points. Again, we have seen some sort of a drop thereafter. Is that market so bad? Certainly. The renowned financial institutions at global level have underscored at the rate at which our GDP would grow in the current financial year. But ours is not the only country whose GDP growth rate have been decimated like this. Barring the exception of China and few other countries, virtually each and every country from the world is facing the same. And result is common, that is Corona Jindabad. Not only in April 2020, but we are witnessing the same scenario in April 2021. Major commercial centers across the country as well as across the world are facing this particular problem. There is a huge discussion and some action as well. I repeat, huge discussion and some action as well as far as restrictions on economic activities are concerned. And this is adding a fuel to the fire. It is not that only performance would go down as far as the national economy is concerned or a particular sector or a particular business is concerned, but it is affecting psychology more. So if one has to distinguish between a fall witnessed during calendar year 2020 and fall being witnessed in this current week, one can say that as far as 2020 fall was concerned, it was more triggered by economic activity or the economic factors, whereas what we have witnessed in April 2021 is more to do with the psychological factors. It is not that only psychological factors are important. Certainly, those psychological factors are based on certain hard facts, and which has said, as has been pointed out by various global agencies, that our GDP growth rate, which was at one point of time was asked or expected to grow by more than 13%, would go down to 10%. So it is hardly a drop of 3%. But just imagine that in the last financial year, which ended in March 2021, our GDP has gone down, or a GDP growth rate has gone down by 6%. So even if it grows by 10%, virtually it's a jump from minus 6% to 10%. Is it not a factor which needs to be looked into? And it is not that our entire economy is going down. There are certain ray of hopes. It may be by way of automobile sector. If that would not have been the case, Maruti Suzuki, the largest producer of our country as far as the automobile sector is concerned, would not have witnessed such a huge rise as far as their car sales is concerned. Yes, certainly in the month of March, April, especially the second fortnight of March and the first week of April, the car sales have gone down. But it was more due to the lockdown restrictions being imposed. But even then, if you see on year-on-year basis or a month-on-month basis, Maruti Suzuki has reported a good rise as far as the car sales are concerned. And company is quite hopeful that once these particular restrictions and lockdown gets relaxed, I am not using the word lifted, once again that particular pace would pick up. Company is so confident that even in this current phenomena, company has dared or company has increased the car prices by up to 23%. Wording is up to 23%. And it is across the cadre and basket of cars which they are going to sell, right from a mini car to their SUVs. That clearly shows where the market is picking up. Certainly, because of the lockdown or restrictions on public transport witnessed during the last 1 year or so, now the Indian citizens are moving slowly towards the personal vehicles. If this is really true, not only four-wheelers, but even the two-wheelers would see the rise. Probably e-vehicles would get a good fillip, because many automobile sector companies, including Maruti Suzuki, have slowly enhanced their capacities to produce the e-vehicles. And certainly, e-vehicles has given some sort of a fillip as far as our two-wheeler and four-wheeler sectors are concerned. Certainly, there are certain restrictions getting imposed or the limitations being faced, because we have seen that or witnessed it. When the car industry or automobile industry started shifting towards gas-based technologies, gas pumping stations were really running short in number. But when in one of an interview given by our Road and Surface Minister Nitin Gadkari, he has said that he is actively considering the German model, where German government has mandated each and every petrol pump to provide the electronic charging points as well. If this particular point or this particular policy gets replicated in our country, certainly it would be a huge fillip as far as our automobile sector is concerned. Because no one is concerned or no one has any doubt as far as the effectiveness of e-vehicles are concerned. The major hiccup was relating to the charging. People are ready to wait even otherwise as far as the speed limits are concerned. Given the traffic conditions and road conditions in our country, although it is getting improved thanks to Nitin Gadkari again, there are these points which need to be considered. Here I am not to brief or holding the brief on behalf of the government, certainly not. But when we are considering the investment field, such green shoots need to be considered upfront. And that's why I said, although the market has seen this kind of a scenario, if we are able to compare or ready to compare this weekly phenomena with a yearly phenomena, as I have said in many times as far as my earlier parts of market or Bazaar Gappa is concerned, that the year 2020, the highest point of BSE Sensex was 42,000, lowest point was 26,000. Then it witnessed a level or a peak of a 52,000, and now it is in the vicinity of 49,000. So if we are ready to witness and experience 42,000 to 26,000 to 52,000 to 49,000, compared to that in percentage points as well as in real terms, this particular weekly fall is not much. But certainly it's a signal that we need to be choosy as far as the investment field is concerned, and especially the secondary market is concerned. Because this is the period when now we will be getting to know what are the annual results as far as the various companies are concerned. They have started tickling in. Companies like TCS are already out with the results. They have gone to the extent of declaring rupees 15 per share a dividend. Certainly it would be paid only after the AGM is over in June. But certainly that clearly indicates what sort of a consolidation is taking place. Infi company is going to say that they are announcing a buyback of shares. Is it not an indication that despite a year-long corona impact, my IT sector is moving in a right direction? Not necessarily the entire sector as far as IT is concerned or information technology is concerned. There will be differences between company to company. There are certain companies like Majesco who are in the same period winding up a business, but there are certain companies when they declare a dividend. That clearly indicates that not only they are profitable, but their business income and their liquidity is also intact. Can we concentrate on such companies? Point number one. Point number two, this is a period when we have seen that many government companies have announced a second interim dividend in the month of March. Coal India is a classic example thereof. Bharat Electronics Limited is a classic example thereof. Just imagine, in the last fortnight or a first fortnight of a March, which happens to be the last month of our financial year, companies are declaring the interim dividend. That means their final dividend is still pending, which they would be announcing at the time of disclosure of their annual income. So if we are able to consider the government companies, at least for this particular short period of time, whether it is BEL, BDL, Coal India, Petronet LNG and many others, including some defense sector companies as well, probably that will be a good sign to have. So we will have to be choosy. In fact, if really the Sensex levels are going down, that would be a good sign for us, because we may be able to buy certain shares at a bargainable price. I do not know whether they will turn out to be a 10 baggers or not, because certainly one can compare the 10 yearly gap results, one can certainly result or compare even a 10 weeks kind of a figure. One thing is certain, that this particular market would give us opportunity to introspect ourselves and our investment strategies. The results and reasons may differ from time to time, but a necessity to have such kind of an exercise, at least done by ourselves, is warranted. And that was exactly the point which I am going to make as far as this episode of Market is concerned. It is true not only for equity market, it is equally true for mutual funds. It is equally true for other investment opportunities like gold, and it is equally true as far as the liquid funds and GSEC and bond markets are concerned. Because not only locally, but globally as well, the scenario is quite fluid. Many leading countries like America have started revisiting their economic issues. Joe Biden's government has already started taking decisions in this particular regard. And eco-political map of world is undergoing a change. It might not have seen some sort of an emergence of a trade bloc which happened after the Second World War. But we are certainly seeing the realignment as far as the business professions are concerned. And it is true not only for a defense related product, it is true not only for the fast moving consumer goods item, but it is equally true as far as the pharmaceutical companies are concerned. We have seen that the Indian government is negotiating with many oil producing and exporting countries that we will keep on importing the oil from them, but they should expect the payment not only by way of a dollar but also by way of commodities, including PPE kits, sanitizer and vaccines. At the same time, we have seen that many European companies and countries are facing a problem where European Union is indicating that a major chunk of their first set of vaccines will have to be consummated and supplied only to the European Union countries. I'm not saying that European Union will stand alone, but if this kind of regional blocks are concerned, to some extent, even the logistic requirements would undergo a change. And that would have an impact as far as the international and global logistic markets are concerned. And it would have the impact as far as their business operations and profit operations are concerned. It is equally true for banking industry as well. We have seen and we have read into the newspapers that Citibank, which happened to be an iconic bank of our country once upon a time, although it was a foreign bank, but in early 80s and early 90s, we have seen what sort of a predominance this particular company or bank was having. But today, they have taken a decision that they would be winding up a business as far as their retail banking operations are concerned in our country. Ours is not the only country. They are virtually realigning the product. To that extent, our banking sector would see a change. We have seen the names of suitors as far as acquiring the business of a Citibank retail business is concerned. And one of the criteria therein was Tata Group. Just imagine if Tata Group becomes successful as far as acquiring the Citibank banking business is concerned. Is it a precursor of Tata Group's entry in banking? Is it coincidental that Tata Group's name is also in the forefront as far as acquisition of Air India is concerned? Is it some sort of a different alignment as far as the business conglomerates are concerned? That would certainly change a rule. Accordingly, it is high time that we take note of such niche factors as far as our business decisions are concerned or as far as our investment decisions are concerned. And that's why I said this current situation may be frightening, but to be honest, it is frightening more because the situation is fluid. Situation is not frightening just because it is not factual or it is based on fraud. No. The business mathematics, business statistics and business logistics is undergoing a change. Let us be patient enough to first realize and then analyze what exactly is happening. All the best for the same. Thank you very much.